The biggest issue with the cryptocurrency market right now is the lack of liquidity. And I believe over the next few months, it could have severe consequences. So in today's show, I want to run you through exactly what liquidity means in crypto, what the detrimental effect of low liquidity can be, and how you can position your portfolio for success in the midst of this liquidity crisis. Now, 9 days ago, I did a video over on the channel. If you guys watch my daily live stream, you'd know that I was saying that there was going to be a good opportunity to short Bitcoin, and off the back of that, altcoins as they were losing strength versus Bitcoin. We can see here, 9 days ago, if we go back to the time that I made that video, Bitcoin pumped back into our diagonal trend line. We had a rejection just above, which lines up exactly with my blue box on that show, where I said this would be a decent place to actually take a short, a deviation short above. You can go back and watch the video. That's exactly what happened. We deviated above into that blue box. Then we rejected below. We had a perfect retest of this diagonal. As you can see here, that was my second entry zone on the perfect retest. And then since then, the Bitcoin price has been down 7%, but many altcoins, of course, bleeding and losing strength versus Bitcoin are down 10 to 20%. So if any of you took those shorts, well done. You guys know 9 days ago I was bearish for a reason. A lot of people in the comments were calling me a clown and getting annoyed at me, but I was bearish for a reason, and that's I was seeing lower highs being set up on the market, and usually lower highs to me in the midst of what was a pretty aggressive meme coin run tends to signal local tops. And I also tweeted about this on May 1st, which was 11 days ago. I said meme coins like 𝗕𝗚 are exploding, but total 3 is flat. This indicates that no new liquidity inflows are entering the market. Not a bullish sign considering most meme coin rallies signal local tops. Simply capital rotating from one coin to the next. And it's quite interesting. We can actually see, and let me start this tweet right now, that whenever we get these big meme coin runs, that often does, coincidentally or not coincidentally, because we only have a sample size of 3 here, but typically it actually does signal local tops for the market. So Bitcoin has put in multiple local tops around the exact same time that we've had these huge meme coin runs. And look, if meme coins run and there's new liquidity inflows into the market, so you're getting retail people coming in, and you're getting them buying on Coinbase, you're getting them buying on Robinhood, like they did with Doge in the beginning, that is good for the market. Like this meme coin run was actually good for the market, this slightly smaller spike, because what we had was new inflows coming in. And when you get new inflows coming in, and you can see this on the charts like the total 2 and the total 3 to see how much money's going into alts, that's good because typically profits diversify into other coins. But this time, as I mentioned on my Twitter, it wasn't like that. The total 3 was flat. There was no inflows. There was basically nowhere to buy these coins if you were retail. So it was basically just in the beginning, just people speculating on these coins on dexes. So like more experienced crypto market participants fighting against each other to make meme coin profits. And by the way, if you're a creator, I must say that it's been shameful the past couple of weeks. The amount of shilling, undisclosed shilling of meme coins. I did a tweet on this yesterday. I really do condemn the pump and dumping behavior of all these creators getting involved in this meme coin frenzy because, I kind of felt like the last week was disappointing. I think what the bear market does is it kind of, because there was a real premium and a focus on like building during the bear market for that period of time, and a real focus on and a real kind of detraction of hype. It gave us the illusion of progress, I think, in the bear market. So like during the bear market, everyone was saying they're focused on building. Everyone was, not very hyped. We were seeing more people doing fundamental research because that's all you could really do. But as soon as this meme coin frenzy came back in, the switch just reversed completely, and people were very quick to start shilling and very quick to jump back on the meme coin hype train. And it showed that, the bear market really just was an illusionary event. The market really hasn't changed, and we're still pretty nascent as an industry. So I think there was a slight illusion of progress in the market over the last few months going on to the last year since the Luna and then FTX collapse, that we were actually making some progress. I think that the market's the exact same. It's still one big money grab casino. And look, I think one day that does change, but I think it's just happening at a much slower pace than we'd like, because as someone that really likes fundamental research and really believes in this technology long term and wants to invest in avenues to get exposure to the success of this tech, meme coins certainly don't appeal to me in an intrinsic moral manner in the same way that I would prefer to, trade, quality, fundamental, long-term projects. But, you can make short-term money off meme coins, and I've been very public about that. I made a 10x on 𝗕𝗬𝗕𝗬𝗕. I've traded meme coins for fun, but as long as you don't let this kind of meme coin investing wreck your ability to succeed long-term, then it's fine. But unfortunately, I think a lot of people do get wrecked and end up ruining their long-term portfolios based on the pursuit of short-term gains. J-Dog says the meme season is cycle peak. Flush out is needed. That's exactly what we're getting, and that's exactly what I was warning of 11 days ago when this started, that this could signal a local top. And it's pretty funny that basically that exact same day, that was the local top. Like, this meme coin run literally started on I would say the 1st or 2nd of May. It really hit its peak on that weekend, the 5th to 6th of May, and that was literally the local top for the market. Ever since then, it's been downhill. And that's largely due to the fact that it was just a rotation of capital out of other coins into meme coins. And then that capital ends up flowing into the hands of the creators of those coins, the early whales, the early buyers of those coins. And most retail ends up getting wrecked, gets sick of the market, leaves the market. Then we see liquidity dry up. So that's one factor. But this liquidity problem goes a lot deeper than the meme coin cycle. That was really just an additional point. The crux of this liquidity issue actually stems from what is heavy-handed and very shaky US regulatory provisions. And I think that Operation Choke Point, in confluence with Jane Street Jump Crypto, so major market makers leaving or reducing their exposure to crypto, plus a lack of new inflows due to a lack of general retail interest in the market, has created a very dry environment. And it may stay dry for quite some time. And I want to get into, if it does stay dry, what are the effects of a dry market? What does a lack of liquidity even mean? Because I know a lot of you may not be so familiar with the actual effects of liquidity. And today I want to educate on the effects of low liquidity, because we've seen this rodeo before. We've seen this in last bear markets. We know what happens to price during these periods. We know that it's a harder environment to trade in during these periods, and it takes a kind of different strategy, I think, to succeed and come out the other side of these kind of weird low volume environments. Because it's a difficult game. It's a different game, and you can't treat every single environment the same. You have to kind of base your strategy on current market conditions. So let's get into what it actually means. So if you guys don't know what liquidity is, I'll explain it very simply. It's essentially the measure of the amount of capital in the market. Typically, this is measured by the amount of bids and the amount of asks on an order book at any given time. So you guys know how exchanges work. They're basically order books, most centralized exchanges. So you have buyers on one side, you have sellers on one side. So you have asks on one side, and you also have bids on the other side. So people trying to buy and people trying to sell at a certain price. And basically, the more bids, the more asks you have in the market, the more liquidity. So the more potential volume to trade, the more liquidity on an order book. And the more liquidity means the more efficient the price action becomes. Because if you have high liquidity, so lots of orders in the market, lots of trading volume in the market, lots of activity in the market, liquidity is basically just, a term for money, the amount of capital and trading circulating in the market. The more of all of that, the more efficient price becomes. The more efficient price discovery becomes, the quicker order execution happens, the less volatility you get in the market. And the less volatility you get, the easier it is, to trade with leverage, and the easier it is in general to have organic price movements. Now, a low liquidity environment is when you don't have as many orders, when you don't have as much capital going through the system, and when you don't have as many orders on your order books. And what happens here is smaller orders can impact price more. So if you have an institution coming into the space and they want to buy $1 million worth of Bitcoin, that $1 million buy is now going to move the market a lot more because there's not as much liquidity in the market. So it's going to move the price more. Similarly, when you get sell events in the market, if they were to sell $1 million worth of Bitcoin, this is going to affect the price negatively a lot more because there's also not as much liquidity in the market. So basically, the easiest way to think about liquidity is more liquidity, less volatility, less liquidity, more volatility. And you might think volatility is a good thing that gives us trading opportunities. Yes, in a way, but also no in a bigger way, because the volatility you're thinking about isn't the volatility we like. I'm talking about these crazy scam wicks. I'm talking about crazy price swings on hourly charts. I'm talking about one order affecting the price 5%. That kind of volatility. That's not the good kind of volatility. We like volatility in the sense that we get big moves in one direction. We get clear big directional moves backed by volume. When you're getting big moves backed with not a lot of volume, that becomes a lot harder to trade, because the more volume, the more legitimate crypto moves become. Whereas if you have a low liquidity environment and there's moves happening off low volume, that tends to affect the market more, but it also doesn't have the same validity to the pump. Typically, you might see fake outs, bull traps, bear traps, so it just becomes a lot harder to trade. And basically, if you look at the daily average top of book liquidity, you can see this is declining a lot. So we're currently in May. Look at January. This is the top of the book liquidity. We can see that we've had a big reduction in liquidity, and that's one of the reasons why, and it's probably actually impacted by the market maker reduction in the market. For example, Jane Street and Jump Crypto exiting their well, they're not totally exiting the crypto market. They're still in the market. But if we look at the article by Bloomberg who broke this story, we can see they're pulling back from trading digital assets in the US as regulators crack down on the industry. And they're going further by scaling back its crypto ambitions globally because regulatory uncertainty has made it difficult for the firm to operate. Jump Crypto is pulling back from the US market for the same reason. So what do less market makers in the market mean? Less market makers mean less liquidity. Think about it. What Jump Crypto does, they literally trade with their own capital on the market. So they'll put up millions of dollars. They make money from spreads. So they'll put up millions or billions of dollars into a market. So they'll have asks, they'll have bids, they'll trade against themselves basically in order to provide liquidity to the market and make money on the spreads. So they're actually liquidity providers, market makers. That's their role. So the less market making you have in the US, the less liquidity on US based exchanges. Obviously the more volatility. We just talked about what liquidity means before. Let's actually talk about the current state of the market though. So is liquidity actually going down? Do we have any data behind this? Well, I want to go through the data now to show you what is actually happening. So if we look at what market depth is, it's essentially one way to gauge liquidity. So there's no liquidity chart. It doesn't exist. There's a few different pieces of data we can use to work out what liquidity is. One is market depths. This is basically the representation of the amount of orders waiting to be filled on an order book within a certain price range. So by summarizing both bids and asks within 1% of the mid price for the top 10 assets in crypto, you get a good barometer of liquidity in markets. So that's something I'm going to look at now. You also have volume. Volume's an indicator. You also have charts like Total 3, which indicate inflows. That's another indicator. There are a few indicators you can use. I think market depth is a great one. So let's have a look at what's happened to the market depth in recent times. So if we zoom out over the last few months, we can see that the market depth in Bitcoin paints a slightly cautionary picture. Why? Because we're currently at our lowest level. You can see on the chart here. Right now, we've seen since the FTX collapse, it's barring a few spikes, it's been largely in a downtrend. We're at our lowest level of liquidity in Bitcoin in 10 months, even lower than the aftermath of FTX. So right now, there's less volume and there's less money in the order books than there was back in FTX, which is pretty crazy. And we saw the FTX result in this initial drop of liquidity, and now we're seeing an even bigger drop. So this gap is yet to be filled. And with banking issues of late, it's taken another blow. The closure of SEN, the wind down of Signet, and some other USD payment rails for crypto has resulted in exchanges, especially in the US, being hit harder from a liquidity standpoint as market makers in the region face unprecedented challenges to their operations. So what's actually happening? Well, I believe this is a lagging effect. Look at what happened to liquidity during the FTX collapse, right? We had a major dip. Now, months later, we're now starting to see the effects of the FTX collapse via the strict regulatory action, specifically from the US, now starting to affect the market. So you have a few different combinations. You have obviously market makers like Jane Street and Jump pulling out, but that isn't the leading cause. That's a result of what the US is doing with their Operation Choke Point, basically limiting the on and off ramps from crypto, which is blocking liquidity from coming into the market. Because if you can't get money onto crypto as easily, the market's going to have less liquidity. If you can't get money off, there's less of a reason to put money on because you know it's harder to get off. So what is really happening is most of the reduction in liquidity is being caused by the US clamping down. That's made it very hard for these market makers to operate in the US, so they're scaling back. So they're not putting as much money into the market anymore. That is one of the major reasons. And then your other major reason is of course, many of the crypto banks are starting to exit the space. And that's also a result of choke point. But all this is happening in the midst of what you would consider to be a bear market. So the problem is, if you see, typically liquidity reductions happen in tandem with market price reductions. But what's kind of been unique over the last few months is that we've had spikes in price whilst liquidity is going down. This isn't a great thing. It means Bitcoin was kind of being driven, I wouldn't say inorganically, but it was being driven by a catalyst, this banking narrative. But the actual market structure, the market fundamentals during that time weren't moving in tandem with price. So low liquidity in a bear market is not the best combination. But I think it's also, the liquidity level is reflective of the fact we are in a bear market, right? Because a bear market means lower trading volume, lower retail interest, and lower interest in the market generally means less orders, less activity in the market. So it's a cause and effect relationship. Liquidity can cause bear markets, but it can, and the reasons that cause that reduction can be external factors like regulatory, and also bear markets can cause reductions in liquidity. So it happens both ways, because there are factors on both sides. In April, Binance saw the world's largest cryptocurrency exchange, saw a 48% drop in spot trading volume. So we're actually seeing volumes on exchanges starting to dry up. We can also see the chart I showed you before, order top of book liquidity decreasing. In terms of daily exchange volume, this is also pretty low now. It's at 16 billion. This is basically a downtrend. If we go onto the 12 monthly chart, we can see, I've accidentally highlighted this, we can see a reduction as well. If we go into the 3-month chart, we can also see that we spiked at 48 during March, and now we've kind of reached this plateau. And over the last month, we're also at our lowest point. So in terms of volume, we're also seeing a reduction. And a lot of this is being driven by this US-based reduction. So because of the regulatory action in the US, this has caused the drying up of trading volume and liquidity. So you can see actually US volume in May, and I know we're only 12 days in, but even if you triple this, is on track to come in lower than April, which was lower than March, and only 2 months in the last year have been lower. February, no, that was actually higher. So the only month that was lower was December. And December, if you guys remember, was the month after FTX. So this is when everyone was kind of panicking and worried and scared to get back in before January kind of started this new uptrend. So the trend right now is quite scary. And the issue is, so what is actually the issue with all this? What's the issue with volume decreasing? What's the issue with liquidity decreasing? Well, I already discussed that it becomes harder to trade because of market volatility. But the other major issue is we have supply overhang. So the problem is, and different from other environments where you get low liquidity, but it's fine and the market just recovers. The issue right now is that we have a low liquidity environment, but we also have supply overhang. So we have the US government wanting to sell their 40,000 Bitcoin that they seized from Silk Road. We have Mt. Gox distributing its 142,000 Bitcoin to its creditors. We have Jane Street and Jump scaling back. That actually means they're likely to sell off crypto holdings, because if you are scaling back market making operations, you don't need to hold the same amount of capital, right? You simply just don't have a market need to hold as much crypto if you aren't trading as much. And they said they want to scale back exposure. Jane specifically, we know they have exposure to Ethereum. Not a whole lot, but it's still another supply headwind. And then you also have Voyager liquidating 38 unsupported tokens to pay its creditors. This includes things like, and I might actually have a picture of this. This includes all these tokens. So you've got Algo, Atom, AVAX. I discussed this on a show earlier in the week. It was called, let me actually get up the exact show for you. It was this one. These alts are about to bleed, supply dump, imminent whales are selling. This actually discussed all the token unlocks. So if you're more interested in hearing about Voyager and what's happening over there, go watch that video. I won't repeat myself today, but I explain what's happening over there. So basically you're having Voyager selling as well. So this just adds to the list, which keeps going on and on and on, of why there could be supply overhang in the crypto market. Now, supply overhang is fine in a bull market. Supply overhang's chill, because there's so many buyers coming into the market that it doesn't really matter. And when liquidity is high, it doesn't matter, because orders get eaten up, and orders tend to, they don't wick the price as much, because there's sufficient amount of orders on the order books to balance out sells and buys. But the problem is when you have an environment where there's not as much liquidity on your order books, and you get things like the US government and Mt. Gox creditors fat fingering their Bitcoin positions, that's going to cause more price volatility. So you're going to get more sways and more aggressive moves, and presumably to the downside in the price, because there's just not enough liquidity in the market to counteract things. And that's exactly what happened yesterday. So the reason I'm making this video today is because yesterday was the first sign of that actually happening. We got what was mere panic of Bitcoin being sold from the US government. It wasn't even the real deal. It was a false flag on a wallet that wasn't even the US government's, that triggered some alert on someone's Twitter, and that resulted in a 5.5% drop in just an hour for the Bitcoin price. And that was purely just based off the thought of them maybe selling. I mean, what happens when they actually sell? Yesterday there was just no volume, and we still got this huge drop, and people were still getting liquidated left, right, and center. Like, what happens when they actually choose to sell? That was the false alarm. What happens during the real deal? That's my question. That is my question. And it's kind of weird because it's public information that they're selling. We know they're selling over 4 installments. This hasn't come at a shock to anyone. But I suppose the market is still panicking about this, and it kind of is giving us an insight as to the fact that it might not be fully priced in. So today's video isn't to come out and be super bearish and scare you and say, oh, I'm not saying sell and just like exit and panic. I'm just trying to educate on what it actually is and what it means, and just understand the environment that we're in. So we all love to talk about meme coins. We all love to talk about alts that we're buying. And I will, in a second, by the way, get into like my buying plan and strategy quickly. But I think it's just important to understand the environment we're in and really track this stuff. And just be aware of it, because it does become harder to trade. So if you are trading, especially using leverage, just be a bit more careful. Don't try your crazy like breakout trading like you previously would be in another market. Maybe just be a little more selective with your entries. Go for more of your swing trades. Like I've been going for like short positions over the last week in line with what the plan I talked about on that video, that basically, involves shorting alts off major Bitcoin moves in confluence with the breakdown of their Bitcoin pairs. So those are the type of moves that I'm looking at trading. And I think those right now, kind of shorting these big bounces is one way to go about it. But that's if you're a trader. If you are just an investor, I think you just got to put your head down and research fundamentals. Now is the time to start looking, especially if this dip goes deeper to 24 to 25, we could start getting some much better long-term entries on alts. You guys know when we're at 30K, I was not buying alts. I was very public about this, saying that now is not the time to build long-term positions. You can build short-term narrative-based positions with the rotational part of your portfolio, which should be much smaller. But in terms of long-term, I'm talking 1 to 2, 3 year holds for next cycle, this isn't like the time to be buying. The time to buy those positions, though, will definitely be after we get major pullbacks. I'm looking at this 24 to 25K region if 26.5 doesn't hold. And then, of course, we have range lows and we have the lower range. Look, I don't necessarily know how low we're going to go. And I don't think you need to either. I think all you need to do is stay adaptive. Watch at how price is moving into 26.5. Watch at how price reacts here. I definitely think we could get a bounce. This is my first level to try and catch a bounce, not with long-term positions, but with maybe some short-term trades. A bounce back up into this range if it looks something like that, or if we come down and then bounce back up. That's kind of something to try, maybe with a stop below. And then depending on how we react here, if we break down to range highs, monitor how aggressively we're going back down to 25. So if we've wicked right down, then that's probably a sign that we're going to go lower because price is moving aggressively. If we come down slow and then we see like a strong bounce and we start making higher lows off range high, maybe we come down, deviate below, and then start reclaiming, then you could probably assert that this is holding and this is a decent place to start getting some entries. So these are the two zones for now for your kind of long opportunities, but just keep an eye on it. Just see at the time how aggressively price is moving into these areas. Monitor the volume, monitor the liquidity, as we've spoken today. Look at the market depth, the order book, stuff like that, order flow, just to work out how we're moving into these ranges, and that'll give us an insight as to whether we flip long. You don't need to be an expert here and try and like catch every single dip. all you need to do is monitor how price is reacting around that zone, and that gives you a better idea as to how aggressive you want to go with actually buying in the dips. As Christian said, buy the dips. I mean, I'm a believer in stacking fundamental projects for next cycle, and if you're doing that, you need to be selective with your entries. There's no need to rush into any position. There's no need to FOMO into any position. I saw a lot of FOMO in this range. There's just no need to do that anymore. So look, if you do want to do any trading, we did just come up with a pretty nice sign up deposit bonus with PrimeXBT. Now, in today's video, I've talked a lot about liquidity, and we know that when it's low, this means you get more volatility. So obviously, do not use money you can't afford to lose when leverage trading. There are spot options on PrimeXBT. You can just buy spot if you would like to, and there's no need to trade with crazy leverage. If you do want to use leverage trading, just be a bit more careful in this environment. So it really depends on your strategy, but just make sure you're careful in this environment. And there's still trading opportunities. I'm still trading. I'm just being a little bit more selective with what kind of trades I get into. So we do have a pretty nice deposit bonus. If you click on the link in the description for PrimeXBT, and they don't just have crypto, by the way, they have Forex and commodities and stuff like that as well. If you click on that link, you can actually get, if you click the second box, a 20% cashback deposit on your deposit. So basically what that means is if you put $1,000 in, you get $200 worth of a deposit. I believe percentage-wise, this is the biggest deposit bonus I've ever done on the channel. It might even be the biggest deposit bonus on the channel. So this is pretty insane, but it's only limited to 100 people. So the first 100 people that use 𝗲20 get the bonus. If you don't, then you don't get the bonus. You only get this other one, which is up to 7,000, but it's probably only at a sub 5% cashback rate. So if you want the 20% deposit bonus, use this second link in the description. And remember to be safe with trading. I'm not recommending using crazy leverage. There's all sorts of options on PrimeXBT for different people and your goals. I can hear myself speaking. Okay, there we go. Whenever I click on my YouTube, I can hear myself talking. It puts me off. Let's go through a bit of news now. Stuff that broke overnight. I'm doing shorter shows these days because I think it's just better. Let's go through a few key pieces of news, and then I'll talk a tiny bit about alts at the end and discuss, what's happening in the altcoin market. First thing is, this ties into what I was speaking about earlier. Binance US explores ways to decrease CZ's dominant share. So basically, CZ's been looking at offloading his US position. I think this is obviously under scrutiny of what's happened in the US. So we're, just seeing more players start to exit that space. Coinbase is launching international exchanges, and we're also seeing many other exchanges move internationally. What was a BitREX stopped in the US. Like, this is a real problem. It's a real problem, and it's one of the drivers between the liquidity crisis. The thing is, though, there's also elections coming up, and this we can't make an assertion that the US hates crypto. Although right now that is true, they freaking hate crypto. And Gary Gensler's done a full pivot since he used to do MIT lectures on how good crypto was and how it was a commodity. We know this is a mainly Democrat pushed agenda. So let's see if, obviously we don't know who the next president party to get elected will be, but it seems like the Republicans are much more pro crypto than the Democrats. So this doesn't mean the US hates crypto. It might just mean one party hates crypto. Let's see how if things change if another party actually does get elected. But as crypto participants, we can't just count on elections. We do have to just work on creating a sustainable long-term environment. And for me, that is kind of indicating a trend more so out of the US and into like UAE countries and Asia as well. By the way, at the end, we're going to do a Q&A to answer all your questions. So Coinbase, one of the people that are moving internationally as well, apologized for Pepe comments as delete Coinbase trends. So what happened was, basically, they had this crazy campaign, and they described the Pepe frog as having been co-opted as a hate symbol by alt-white groups in an alt-right groups in a Wednesday newsletter. The hell, this is crazy. We're screwed up and we're sorry. Coinbase Chief Legal Officer Paul Grewal says on Thursday, yesterday we shared an overview of the meme coin to provide a fact-based picture of a trending topic. This did not provide the whole picture of the history and the meme, and we apologize to the community. #delete Coinbase was trending. Let's see actually what it said. So Coinbase said, because I saw this trending, and that's why I brought up the article. What you should know about this Pepe, the meme coin at the moment. The token is issued. Over time, it has been co-opted as a hate symbol by alt-right groups, according to the Anti-Defamation League. What? Okay. Well, I wasn't aware of that, but they've totally left out the fact that it's just generally been a popular meme in pop culture for years. So they've completely left that out. But that's a weird association to make. So Coinbase, congratulations of pissing off the one community that was actually potentially going to give you trading volume over the next few weeks. Because none of the other coins are. So that's great. Let's talk about the altcoin market now for a little bit. Gsensler needs to restart his life. Well, I don't know. He's clearly under some pressure and he's just pivoted completely. So something weird's going on behind the scenes. It's scalping time. Don't force trades long term. Especially don't use leverage. Yeah, I mean, for some people, not using leverage is smart. How I view leverage is it's a tool. So leverage is not, it doesn't exist to give you an excuse to 10x your position size just to gamble with free money. What it is it's a tool to actually gamble less, but get the same amount of exposure. So I can open a $1,000 trade and get $10,000 worth of exposure rather than me having to bet $10,000. So it's actually a risk management tool, if anything. Unfortunately, a lot of people use it to gamble. So if you're using it for risk management, especially for hedging and stuff like that, hedging against big spot positions, it becomes a very good tool. But if you use it recklessly to gamble, then it becomes a very bad tool. That's all you've got to be aware of. They want to push the CBDCs. Probably why the banking collapse is such a thing. Big Mars in the house, Nagatoshi. Welcome. Some people think you're Satoshi. Nagatoshi. Are you Satoshi Nagatoshi? Sub 15 incoming. That's a little bit too bearish for me. I certainly am going to start buying alts a lot higher than 15, but I'll have a backup plan in case we do go that low. But I wouldn't start panicking now. I think things are starting to look pretty bearish from a sentiment perspective. I mean, we can see this on the alt chart right now. So just look at this last week for alts. It's been a fucking bloodbath, and you probably notice if you're holding alts, your portfolios are down 50% since their peaks. Alts have puked most of their gains, to be honest, and that's because we have dominance rising. In general, I know over the last few days we've seen periods of dominance actually going down, but in general, dominance has been rising. And then when the market reversed, when Bitcoin reversed, alts gave back their gains a lot quicker than other coins. So that's one of the reasons why they're dropping the most. There are a few standouts that could actually become decent buys soon. Stacks is one of them because of the Bitcoin narrative. This is one I'm looking at. I'm buying because right now, if I'm thinking of DCAing to any alts, it's only like the ones I actually I think have strong short-term potential. Because as I said, the time for long-term accumulation, unless you really fundamentally believe in a project and you're happy to stack it long term, the majority of alt proxy bets, it's not time for them yet. CFX, China narrative might be around the corner. Going to do a thread on this later today, so we'll talk about that on the thread. But I like the China play. What else is looking decent? Radix is looking good, but it's it's a huge outlier. Let's look over the last week. Let's see what has performed and not performed. ARB's down a lot. It's got a lot of dilution, ARB, so I'm not a crazy bull on it. Injective's down. Render's down. They're obviously pumped a lot. Monitor their BTC pairs. If you start seeing them reclaim key levels on their BTC pairs, then these would be some of your better bets to catch bounces. Joe as well, those stronger coins. GMX, always a decent one because you're getting exchange volume. The only thing is, volume is likely drying up, right? So if we look at GMX volume on June, I mean, if centralized exchanges are drying up, this is actually one of the biggest points about liquidity I forgot to mention before. When you have liquidity decreasing in a market, who are the biggest losers? Well, the biggest losers are the gamblers because it's much easier to get wrecked. But the biggest loser is, apart from retail, is actually the exchanges because the exchanges make less money when there's less volume. And price becomes much more inorganic and inefficient when there's less liquidity. So your exchanges actually cop it more than any other party in the space. I think they have the biggest headwind. So if we actually look at trading volume on GMX, we can see this is actually in a downtrend too since, 30th of March. Can I get a bigger date on this, please? Can I get from February to today? March, April, May. Can I get the last 3 months? Okay. Yeah, we can see a reduction here as well. It's not a huge reduction. Like, there's still a decent amount of volume, but there is a reduction. There is a reduction. I just find it interesting. GMX is probably your leading DEX in terms for volume. So it's interesting to see the trend here. So we are seeing a reduction all around in trading volume. Also because your DEXs a lot of them didn't have 𝗕𝗬𝗕𝗬𝗕 listed for some reason. Probably because, probably for logistical reasons, like the fact GMX is on Arbitrum and 𝗕𝗬𝗕𝗬𝗕 didn't have a native. I mean, it is ERC20, so theoretically they could probably list it, but maybe there was constraints there, but they didn't get the listing done in time, so there was no short-term spike like we saw on some exchanges like Bybit, who actually had a lot of 𝗕𝗬𝗕𝗬𝗕 trading volume. So GMX relatively though in a bear market is one of your better plays. GLP, it's because it's just like a way to get yield during a downtrend, and when we do get major moves to the downside and volatility increases, things like GMX are beneficiaries of that. But in a low volume trading environment, they don't do so well. So just keep your eye on this. I'm not that interested in buying GMX now, but GLP, on the other hand, as a staking play, that could be something to consider. I'm looking at getting a lot more into passive yield farming opportunities over the next 6 months. Why? I believe everyone's kind of forgotten about DeFi. And actually, when you think about it, when you do the maths, now would actually be the best time to get into quality pools because you can stack more of your favorite tokens and you can actually build up positions for next cycle through these pools. So what I'm going to start doing with this show is really go back to the old days where I used to talk about DeFi all the time and start sharing some opportunities with you to start building a DeFi portfolio again, because as the market goes lower, we're getting some much better opportunities to earn yield and, safer ways to earn yield than previously done. I also feel like I've lost a bit of touch with my DeFi roots. Like that is my bread and butter. And recently I feel like it's all just been macro talk, and my show's also gotten very trading based, and I kind of want to take it back to fundamentals and be a bit more practical and help you guys actually build good portfolios, build good strategies, and each day we kind of monitor them. And that's kind of what I want to make my show a bit more a bit more like, what's the word I'm looking for? More educational, but also more practical and less just commenting on news. Because I feel like you can get news a million places, including Rand's show. My show needs to be like where you come for alpha and opportunities and general strategy. I think that's much better. Thought Elio's been a very good guy on Twitter recently. He said the bear market is designed to shake you out of your quality bags into quick fix garbage, aka meme coins. I'm going to keep dropping data-driven threads to show you how you're effing up right now by gambling instead of executing a repeatable strategy. And he's kind of talking about how you can actually DCA and come out ahead if you invest in quality projects, and how coins actually do end up performing once things reverse, and how they always look dead in bear markets before they reverse. So I would just pay attention to his content at the moment. I think it's quite good. It's refreshing because we're seeing so much short-term rubbish in the space and not enough long-term fundamentals. And that's something I want to get back to as well. On the GMX point, if you do want to trade on a DEX like GMX, I use Gains Network personally. So Gains, do they have 𝗕𝗬𝗕𝗬𝗕𝗬𝗕 now? No, they don't. So they're another one that doesn't have it, but they have a lot of other coins that have Forex as well. So if you do want to trade and non-KYC, because I know a lot of exchanges now are KYCing, obviously the US scrutiny is one of the factors behind this. You can trade on a DEX like Gains Network. There's also a link in the description if you'd like to use that, and you can trade. Basically, they have most major alts that you want to trade, but primarily like your Bitcoin, ETH. Forex as well. I don't know if any of you actually trade Forex. If you do, let me know in the comments below. I find it super interesting. I just never really got into it. I do kind of do Forex trades a little bit, but spot trades, and that's just like deciding, because I'm in Australia, so deciding whether I want Australian dollars or US dollars. It's basically the Oz USD pair is the only pair I really look at because it affects my life the most. So I trade that regularly, but that's more kind of portfolio positioning, not short-term trading. I don't do much short-term trading, especially not on leverage. If you are going to use a thing like Gains, remember, in the spirit of this video, just keep the leverage down. Don't go like this. Don't go like this. Go more like this. Little leverage. Or if you are going to use 10x leverage, use a tenth of the size you'd normally use. Easy. You trade Forex. How's it been going for you? Genzler should just press Alt F4. I know, right? So I want to go back to what I used to do. If you guys remember, if you've been watching the show for a while and you remember this, you're an OG. I used to go on Instagram and I used to do an Instagram live every morning after the show. And I feel like it's been a long time, too long since I've done an Instagram live Q&A, because I've been doing the Q&As on the shows. So let's start an Instagram live. I'm going live right now on my Instagram. It's loading. Let's start an Instagram live and let's do the Q&A over there. Because I honestly miss doing it. And it's really fun. The problem with YouTube is you make the show an hour and the YouTube algorithm starts suppressing it because, I mean, no one wants to watch an hour video. I understand that. So rather than bloating these shows, I'll do a few questions in these shows and then make the longer Q&A over on my Instagram. So there's the first link in the description right now has my Instagram. If you want to click on that right now, I'm about to end this show. I'm going to go over there and stream on Instagram for the next hour. And let's see how big my community is over there because I have 20,000 followers and I want to see how many people are actually over there. So everyone that's watching the show right now, you can go click on that link, join me over on Instagram, and we will continue over there, and I'll do a Q&A over there, and we'll discuss alts and that kind of stuff in a more casual, laid-back fashion. But I hope you enjoyed this show on liquidity. If you want to talk to me, someone said he's not on Insta. I think you can still do it without an account. Maybe not. Maybe you do need an account. Maybe you just need to make an account. Why aren't you guys on Insta? Just download the app and create a quick account and come on. I'm going to do this a lot more in the future, but yeah, you hate Instagram. I mean, it's not working. It is working. Is it not? Let me click that. Just make sure it's working. It is working. It is working. And I also post infographics, like lots of like reels and short form content. I don't know if a lot of you YouTube guys know about my short form content, but I do post a lot of the short form stuff as well. All right, I'm going to see you in the next one. I'll see anyone that wants to come over there. And gaming alt liquidity update, I'll do that over there as well. We'll talk a bit about crypto gaming. And until then, I will see you in the next show. It'll be on the weekend. Yeah, it'll be on the weekend, and I'll also do that China thread for you today. I'll see you later. Peace out.